It's a nasty collapse. And I think the biggest thing to understand here is that this is all about human psychology, right? So in 2021, we saw stocks like GameStop, AMC, Bed Bath Beyond soar to ridiculous heights and then come back in. And what we've seen here is that it's the Wall Street bets crowd has tried to relive the magic of 2021. So they've started to pump these things. They started to run. We saw them go up precipitously, but not as high as 2021. And they've come crashing in so fast. This is the psychological part of it, is that you have, number one, the same investors that were in last time, they got burned when the collapse occurred, so they're much quicker to pull the trigger. Last year, you had months of people saying, hey, I'm never going to sell, I'm going to hold on. You had the apes, you had there's all of these things going on, right? And ultimately, that is no longer intact because human psychology remembers the collapse and people are selling into it. The last thing to remember is that this was inevitable because the Fed in 2021 was printing money, the government was sending checks, all these things. The Fed was basically leaving interest rates at zero or near the zero marker, and that helped these stocks run. Now you have a totally different scenario. You're in a bear market, and that means that these stocks did not have the same flight that they would have last year. So not surprising to see the collapse. I hope not too many people got burned on this, but nonetheless, it is scary, the falls that these things have had.
Hello and welcome to Wealthy Value. In today's video, Gareth Soloway, who is the Chief Market Strategist at InTheMoneyStocks.com, updates about the key factors behind the nasty collapse of the stock market, his long-term outlook for Bitcoin, Ethereum, USA, dollar and gold. He also shares his perspective regarding recession fears and money printing to tackle inflation. Make sure to stick around till the end of this video, where Gareth Soloway reveals what will be the impact of Ethereum merge on overall crypto market. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
But in terms of talking to people and saying follow the herd, you never want to be a follower of the herd. Occasionally it works. It gives you a false sense of security. Generally, when you're following people, you're going to end up losing, especially when it's the herd mentality. The smart money gets in at the beginning of the run, the dumb money later on, and you never want to be in that crowd that's chasing at the end. So avoid the hype, essentially. So what we saw is Friday, when the equity market sold off, you got this nasty candle. It did close below this channel. So look at the beauty of this channel here, how we've been hovering up and down inside of it really since June. But the negative here is that we saw a close below. Now, you haven't confirmed, but as far as I'm concerned, this is a very nasty little pattern formation, and it's likely we're going to go retest this yellow trend line here, which happens to be the high from 2017 right here. That's going to be a big line in the sand. If we break that, then you see that move down that I've been calling for as my secondary target. You know, my first target was 20,000. We talked about it last year in Dubai when I was there in October 2021. We said 20,000. Now I say it's going to actually go lower than that. Next stop is going to be 12 to 13,000. So we are headed lower, and it's going to be a rough road along the ways here. And to be fair, that he's correct on that. And I actually have that same long-term view. I'm a big long-term bull. I'm just a shorter-term macro economist looking at the cycles and everything like that. So the beauty of 12 to 13,000, it gets us to that 80 to 85% correction that Bitcoin has done every single cycle. So that kind of gives us a basis of what to look for. It's also a strong technical support. But you're right. I mean, if you're a long-term investor and you're not going to look at it for 10 years or 5 years, there's nothing wrong with that. You just have to, this is the key, right? You have to be able to weather the emotional storm, because I know a lot of investors out there, they might buy in at 22 or 21, and when they're down 40% at 12, they might panic and unload, because you're going to hear a lot of negativity out there. And if you have to be able to control that and shut it out, and then you're okay to do that. But if you're someone who's very emotional and you're going to exit the trade at that point, and then it goes to 50,000, then 100,000, that's not a good scenario for you to be in. So if you have emotional control, that's fine. Start inching in. I also advocate for dollar cost averaging. Buy a little here at 21, buy a little bit more at 18, buy some more at 15, and so forth, versus just going all in at one specific level. I don't think so, not at this stage of Bitcoin's life cycle. I think down the line, you will see a kind of a difference and Bitcoin and the crypto market start to emerge. But right now, it is tied to a risk asset. I know a lot of people said in 2021, oh, it has nothing to do with the stock market. It'll go up when inflation goes up and the markets sell off. We obviously learned that that wasn't the case. So I'm in the camp that we're going to see crypto sell off with the stock market. I have a big downside move coming later this year in the stock market, and that's going to be the catalyst to really take us to that 13,000 marker on Bitcoin. And I actually think that Ethereum is very likely going to head down to this next target around $645. So I have it priced in. That should be the level that Ethereum hits when Bitcoin hits 12 to 13,000.
How did you come up with that yellow line?
Key major support, it was the beginning of the big bull market. This would be 100% retrace to the start of that bull market. Major support right here as well. It doesn't have to, but it is in my thought process, meaning that there is a possibility of that happening. There might be a lot of hype around the merge that could drive it higher, but I'm not necessarily anticipating that, but you have to calculate that into your kind of your risk assessment when you're looking at Ethereum here. So this is again a fear of the Fed not loose or not backing off. We got the minutes last week from the Federal Reserve meeting. That kind of was the end of the move. Right into those minutes are when we touched the 200 moving average, which was the technical resistance level. And then as soon as we heard from the Fed, it didn't seem as they were as dovish as the market wanted. And we've seen the dollar just soar here. Take a look at the DXY chart. Let me punch that in here. And we've seen the dollar basically up to a double top up here. But look at the run on the dollar basically since that move from the Fed or since the minutes came out. And that is putting major pressure. The stock market does not like a strong dollar. It wants a stable or slightly weaker dollar. And that, again, is problematic here for the market. So as long as the dollar is going higher, it's telling you that, again, investors are moving away from stocks. And that's why we're seeing the selling that we're seeing. If you sell in terms of yen or euros, and then you convert it back, right? So you're taking in yen or euros, and between that period of the conversion back into dollars, the dollar strengthens. So you're actually getting less out of it. And we've seen even stocks like IBM, companies like IBM, they took a $3 billion hit because of the currency issues here. So it's kind of wacky how that's working right now, but it is definitely a headwind. And I think it's important to understand, what does a strong dollar mean? It means people are going into the US dollar for safety. And what they're doing here is they're saying, all right, the Fed is going to drive us into recession. And therefore, and they're not lightening up, even though we know the economy is weakening per economic data. And so they're hiding in the dollar. They're selling risk assets that might be affected by a weaker economy. And that, again, is a kind of an issue that the markets are very freaked out about right now.
So, what are your thoughts about the most recent stock market collapse? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.